it's really those lessons and that. I have been a professional foreign exchange and futures trader dating back to 1975 at the Chicago Board of Trade. I am a classical chartist. I've used price charts to earn my living during all of these years, and in the process have learned a lot of lessons, some the hard way. And it's really those lessons and that perspective of all of these years trading that I'd like to bring to you. I'm Peter Brandt. I am a classical chartist. When I first became involved in commodity speculation, for me, it was a pretty simple equation, at least in my mind's eye. It was a matter of picking the right market, placing a bet, and collecting the money in the corner afterwards. And what I learned was trading is a very complicated process. I have had to learn over the years so many aspects of trading that in the beginning, I would have been daunted by it. There are endless things that a trader must learn and accomplish. Speed bumps one must get over. A person has to learn himself. A person has to learn how do you select markets, how do you scale trades, how do you do risk management, what kind of technology do you use. There's endless questions, and you clear one road bump and you think it's smooth driving and you got another one. And so it's just a never-ending learning curve to become a trader and to grow as a trader during the process of a career. And it's quite a journey, and it's a journey that I have luckily been on for over 4 decades, and I feel privileged to have been able to make my living as a trader. And so really today I want to talk about just what this whole process of being a trader is like, and that will really entail a couple of different looks at the idea of process. One is looking at a trader from the standpoint of having it be a business, of being a professional, of having trading be a legitimate profession. And then the second little angle that I want to look at in this idea of process is the process itself. What does the life of a trader look like? What all things are entailed in the business of market speculation? What does my day look like? What does my week look like? What steps do I go through in the process of being a trader? First, the profession of trading. I have been a professional trader since 1981. It is how I've made my living. It is how I've supported my family. It has been how I've paid for a home. It is how I have accumulated a nest egg for the future. I enjoy trading. I enjoy trading immensely. But first and foremost for me, trading is a business, and it is a dead serious business. Whether a person is a full-time trader such as I am, or they do it to supplement their income on a part-time basis, or perhaps they even do it as a form of recreation, the reality is to be successful at trading, a person has to treat it as serious business. This is not fun in playtime. There's a debate among my peers as a chartist that is charting an art or is charting a science. I think, frankly, the debate is a bunch of nonsense, because in my way of looking, charting is a craft. I'm a craftsman as a chartist, just in the traditional sense of what it means to be a craftsman, to be excellent at something. And as a craft, I view trading as my business. There are a few things that I do to really attempt to treat trading as seriously as I can as a business. One thing I've noticed about businesses that succeed, no matter what the field is that they know their business, they know their product, they know what business they're in, and I try to take that approach too. I know my approach to trading. I have built the way I traded over many years of trial, of error, of running into brick walls, of being slapped on the head by markets when I've been careless. it has been a process. I don't know any other successful trader who is not a good problem solver, and developing a knowledge of the way you trade is really a process of knowing exactly what you're doing. I know in many ways my approach to trading as well as I know anything on earth. I know its heartbeat. I know where it's good. I know where it's bad. I know its weaknesses. I know its strengths. I know my product. I think the second thing I do to try to treat trading as a business is to take it as seriously as I can. I have known traders who have been lazy. They've been haphazard. They trade and then they go have fun. And not that having fun is not something we shouldn't all do, but they're not serious. They don't take it as a serious endeavor. And I try to take trading as a serious endeavor. The third thing is I have built my trading approach from the very early on for longevity. When a young trader asks me for my suggestion, what I tell them is build your approach so that it can stand the test of time, so that it can last. Don't think about next week. Don't think about your next trade. Think about trading as something that's good for a whole generation, that may take you through the end of your career. The fourth thing I try to do to treat trading as my business is to think in terms of having a comprehensive business plan. I don't think businesses succeed without thinking their way forward. It's just not a matter of opening their door today. They have a comprehensive plan for what they're going to do, and that is what I try to do in my trading. For me, a comprehensive plan as a trader goes way, way beyond just simply a thought of what am I going to buy or what am I going to sell? At what price am I going to trade? I'm thinking in terms of a framework for understanding the markets. How do I think about the markets? How do I understand the markets? How do I understand the function of the market? What primary methods do I use for understanding price behavior? Through what lenses do I look to try to understand what markets are trying to tell me? What level of capitalization do I use for a trade? What guidelines do I need to have for selecting what trades I'm going to do and how I'm going to enter trades? What are my overall risk and trade management guidelines that need to steer my ship? How do I think about sizing? I'm a futures trader. So I just go in and say, how many contracts can my money buy? No, I always think in terms of sizing per unit of money. I think in terms of risk. What conditions will I use for exiting a trade? These are some of the things that I kind of fit into this big bucket called having a comprehensive business plan. This is, to me, the essence of what a trading plan is all about. The fifth thing I try to do to treat factor trading as a serious business is to do a systematic review and critique of all my business practices, of all my trading practices. I systematically review every trade I do and give it a grade on an A through F basis. I take a look at trade selection. I take a look at entry. I take a look at sizing. I take a look at exit. I take a look at correlations to other markets. And I give it a grade that I attempt to have as honest as possible. In fact, I grade each year of trading. And so that I'm trying to always look and improve and be cognizant of my trading decision-making process. And part of that is this critique in terms of metrics. There are three major metrics that I keep, and I keep those up and review those on a rolling basis to find out, am I on track? Is the map going the way it needs to go? And then the sixth thing, the final thing that I do to treat what I do as a business, and that is to have a board of advisors. One thing I recommend to young traders is ask some other traders if they will be on your board of directors. Of course, unpaid. But unpaid members of your board of directors to review what you're doing, to review your processes, to review not just that you bought or sold something, but how you go about the business, and to be honest and do critical but honest review of what you're doing. I developed that early on by asking traders who knew the way I traded, who understood the way I traded, and were sophisticated in their market knowledge and their trading abilities to serve as my board of advisors. That group is still together today. It's a group that I utilize. And they don't always tell me the things that I want to hear, but they're honest with me, and I rely on them to keep me accountable on a quarterly basis for my trading activities. So I think you get the idea, and these are just a list of a half dozen of the things that I do to try to take the business of trading as seriously as I can. Earlier, I talked about the fact that the process of trading really kind of entailed two different things. I mean, first, the profession of trading. I talked about how trading really is a profession. Whether it's done full-time, whether it's done to supplement income, it has to be treated like a serious business. Trading is a business endeavor. And now I want to talk just about the procedures of trading. What does that look like? And I want to get into really even what my week looks like on a day-to-day basis. You know, the idea of a trader is glorified. Sometimes I'll meet somebody and I'll say, they'll say, well, what are you doing? And I'll say, well, I trade. What do you trade? I trade Swiss francs and gold and crude oil, and they get this idea of, wow, what a glamorous job, when in fact really just the opposite is true. You know, the process of trading is really the process of just entering orders. You know, at its basic core, a trader is an order enterer. What do I do for a living? I enter orders. I enter orders in a very quiet, procedural, systematic, repeatable way. I am an order enterer through and through, and that is what my job entails. And so I always need to ask myself the question when I'm entering orders is, does this order make sense? And I'm a chartist, I'm a classical chartist. And so I'm looking through my charts, and when I look at a particular chart that I may be looking to trade, the question that stands out in my mind more than anything else screaming at me is, I'm about to put in an order based on this chart. If I were to take this chart up and put it on a wall and put a stick pin in this chart, does the order I'm about to enter make sense relative to the chart that I'm looking at? And the second part of that, which is kind of the look back part, is, does the order I'm entering going to stand the test of time? And I'm going to use this mental picture of a chart blown up on a whole wall. Can I take the chart of gold, for instance, and make it wall size, and get a bunch of red stick pins and get a bunch of green stick pins, and push a stick pin in to every time I traded gold. I'll stick a red one in for a sale, I'll stick a green one in for a buy, and then step way back across the room and take a look at that gold chart and say, do they all make sense? Can I look at that a year after the fact and say, I know I did that trade. That trade made sense. The order made sense. And that's what it means to me to really reduce trading to the whole process of trading. To some degree, I know that I've made trades that I thought were really good trades, but they lost money. But they were good trades because they were trades that made sense. They were trades that stood the test of time. By contrast, I know there are trades that I've made more money than I should have made on them because they're absolutely stupid trades. So sometimes good trades make money, sometimes bad trades lose money. But for me, trading is really a process of entering orders. For me, order entry is just an organized, systematic, repeatable process, procedures for not only doing market analysis, but then doing trade analysis, calculating trades, and then leading up to the order flow. And I think I should best explain this by really kind of walking you through my trading week. What does my trading week look like? Because it is very repeatable. It is very predictable. If somebody told me, what am I going to be doing a year from today at a certain time, I'd be able to tell you. because I do the same thing every Thursday afternoons at 2:59, year in and year out if I'm not traveling. So I want to kind of take you through the week and kind of give you a flavor of what my week looks like as a trader. And so let's start by basing this thing and refixing it to a Friday afternoon. It's Friday afternoon, I'm in Mountain Time, or in Arizona, as the case may be, and the market's closed. That really becomes not the end of my week, that becomes the start of my week. My week starts on Friday afternoons when the market's closed. It's at that point that I begin my look at markets, and I do that by taking all the markets I trade, which is basically every major futures market with liquidity in the world. It's all of the major Forex crosses that deal with the primary currencies and then the primary secondaries. And so there's probably a list of 75 markets that I scroll through. And even those 75 markets, I may look at individual contact months, I may look at continuation charts, and then just this gives you kind of a flavor. This is my super long list, and I'll just kind of scroll down, but it gives you a feel for, I know you can't read this, but it gives you a feel for all the different markets that I'm looking at on a Friday afternoon, beginning at about 3:30 Mountain Time. And what I do is I look at weekly charts. I scroll through the weekly charts, and I just go through each of those markets, and I write down the markets that pop out to me as something that is consistent with the type of market that I'm looking for, the setup that I'm looking for in a trade. Now, I start that list by writing down the markets that I know I already have a position in, because I know those are markets that are going to go further into my examination. And so I know that on this weekend here, coming into next week, that I've got 6 different trades that I'm going to be looking at. They are going to be on they're eventually going to be markets that I really closely examine. And so I start with this list of 75 markets. I scroll through this list of 75 markets, and then I write down markets that for one reason or another of interest to me. Maybe there's a trade immediately setting up. It's a trade I'm in. It was one I'd been looking at the previous week. And I end up then with what I call my long list. And this is a list of 15 to 20 markets that have caught my eye for one reason or another, and I transfer those markets into a list here, which is my long list, which is here, and these are the markets that I'm looking at right now on my long list. So I've talked about going through this big long list of markets and taking that big long list and going to what I call my active long list. And so by Friday afternoon, I have late afternoon, early evening, I have pretty much gone through the weekly charts of my full list of markets. I've made notes, I've reduced it down, I've created this active long list. And this active long list then takes me into Saturday, and I'll spend some time on Saturday going through the active long list and looking at not only the weekly charts I looked at the day before, but also looking at the daily charts. I start looking at the daily charts. I have not begun order flow yet. That comes Sunday, but I'm moving into that. I'm getting close. And so on Saturday, I'm starting to think about the markets. I have a mental picture of the patterns I'm looking at. I'm mulling through my mind, what if this happened, what if that happened? I'm playing out various scenarios, and I'm starting to get a mental picture for the type of orders or strategy that I may take in these markets. So then that brings me into Sunday, and Sunday is then really my stage 2, is where I take the long list of markets that they've already looked at, and I've decided from that long list what needs to be put in an active short list. And so that's the process that I go through, is I scroll through all of these various markets on the active short list, and I check off those that I feel will now move into the process that I will consider them for placing an actual order in the market. They will no longer just simply be on a watch list. They are markets that are now eligible for an order to be placed in, or to be alert to be placed into my computer, so that I may know if something might happen based on the contingencies that I've set forth. And so I go from my active long list to my active short list, and this takes place then on Sunday, is from this active short list then that I prepare myself for the markets that will open up several hours later. And it's also on this active short list that I review every day. This is the list of markets that I will review every day as we go through the week. And so that's stage 2, and that usually takes me up until about 2:30 in the afternoon on Sunday. And now I start getting ready for markets to start opening up in Asia, for the Globex markets in the US to start open, for trading to start, is I'm now prepared to start doing my order entry. And that then takes me into what I consider to be stage 3, which commences around Sunday afternoon prior to the markets, where I will go through each and every market on my list, and I will determine that if it's a market that I'm already in, it's an easy thing. I look at that market, I review what my stops and my targets were from the previous week, and I make the decision, okay, I'm in this market, now I need to have a protective stop. Is the protective stop I had in the previous Friday still the one I want to use? Has there been any reason for me to change my target? And by the way, I always have orders in to take profits when my targets are hit. And so we're coming into that point, and then the markets that I'm not on, that are on my active short list, I make a determination whether if this is a market that I actually want to enter if certain things occur. I'm a breakout trader. I'm looking at, as I mentioned, I'm looking at horizontal patterns. I'm looking at horizontal patterns in the 10 to 26 week range. That's my sweet spot. Let's say I found one of those, or perhaps one that's even maybe a little bit bigger in magnitude, and I'm watching those and I'm saying, okay, if this market does certain things, I'll want to get in. And so I start laying out what my strategy is for entering the stop and target orders for markets I'm already in, as well as my entry orders for markets that I will go into from my short list if certain price action ends up doing what it could do. Where that ends up taking me, by the way, is usually I enter Sunday evening with actual orders working at the exchanges in between 5 and 8 markets. And there's some markets where maybe I'm not ready to enter an order, but I know if certain prices hit, I want to know about it. And I will enter an alert, a price alert for that market. So I am alerted if a certain price hits. Wherever I consider to be an important price, and that would be where I have a target, where I would get out of a market if I'm stopped out, where I get in a market, or it could be just a crucial chart level that I want to know about, I put those all into an alert system. And so if any of those prices are hit at any point during the subsequent week, I receive an email and I receive a text alert on my iPhone. And so that is really how I stay connected with markets at that point, from the point at which I enter orders on that initial Sunday evening, is I'm living by the fact that if something happens I need to know about, I'll get an email or I'll get a text alert. Okay, again, it's Sunday afternoon. I'm at my short list now. I've gone through my big long list. The real long list, I've gone through my long active list, I've reduced it down to my short list. Now is really where the work begins, because now things get converted to orders for markets that I'm actually in or could be in by the end of the week. And so this is the short list that I've got coming into this week, probably, although this was from Friday and I modify this as the week goes on, but it may have some change, but it'll give you an idea. Here's a case where I'm looking at the Aussie US dollar. It's on my short list for the coming week. Again, I'm looking at horizontal patterns. In this case, we have a rectangle that dates back to late April of 2016, right in the sweet spot in terms of my duration. It's right in the sweet spot in terms of the patterns I'm looking at. And so it's a rectangle. And so This particular chart is a weekly chart, but I can go to a daily chart because it's daily charts that I use for actually determining where I place orders. It's difficult to do tactics based on weekly charts. Tactics belong on daily charts. I'm not going to have an order in this market, but I'll have an alert. But this is definitely a market on my short list. I'm not in the market, but it's a market I'm interested in being involved in. Here's another market on my short list, which is the Euro US. This is a market that I have watched and traded quite frequently in the last 2.5 years, but this particular market is formed now a 24 going on 25-month rectangle. We bust out of the bottom of this rectangle in December, early January. And I got short accordingly because I thought that we were having a downside breakout. There were some other reasons I was interested in the market. One of them deals with something I'd call the January effect, which was subject of a paper that I posted on Real Vision Publications. For those of you who want to go back and take a look at that. But still, this is a market I'm actually in. This is a market that I was in last week. It's a market that I'm carrying a long position in. Even though this is a big rectangle, what I see in the daily chart is really quite interesting, and that is the possibility of a head and shoulders bottom here, which could then launch the eventual breakout of the big rectangle. And so I'm jumping the gun on this market a little bit, to tell you the truth. Markets that I've attempted to jump the gun on, to be honest, I've mixed experience on those. I think if I were to add up all of the markets over the years to which I've jumped the gun, to tell you the truth, I can't probably tell you that I'm miles ahead. Because sometimes it's frustrating trying to get involved in a market when it's in the trading range before you get the final breakout. But in this case, it's a market I'm in. And so again, I'm just scrolling through my short list. This looks at crude oil. This is a market that I was short. I covered my short actually on almost a low tick of the breakdown that we had in the last week or so in this market, but it was a trade that was put on the basis of a descending triangle on the daily chart, with the possibility that it was rolling over and failed to really accomplish a breakout that it had on the weekly chart. And so it met its target, and so I took profits. I'm flat in the market, but I talked a little bit about these shorter duration patterns, the flags and the pennants. This is an example of one of those. Even though this trade originally was based on a descending triangle, I'm looking at the crude oil as if we're putting in a 4 or 5 day flag, and we'll probably put in order to re-short it if this flag is completed, looking for crude oil to perhaps go eventually much lower. But again, it's a market I'm looking at. I'm looking at a number of interest rates in Europe, which I'm negative. This is a massive head and shoulders top that is present in the Euribor, which is basically as the euro dollar is to the US, this is really the short-term 90-day interest rate of the European Central Bank. And to me, it looks as if the market is top, which means yields are in the process of bottoming in Europe. We've had zero interest rate policy in the European system for a long time, and we've even had negative interest rate policies in a number of the European countries, particularly the major European countries, Germany and the northern countries. But it looks to me as if it is a market where the prices are topping with head and shoulders top, and yields are bottoming. I am actually short the Euribor right now, based on what I view to have been a completion of this head and shoulders top. And so this is one of those cases where early in the stage, the market hasn't given me much room. This is a case where if the market jerks the wrong way, I'm out, because this is a perfect example of money management being the boss of market analysis. I have a negative opinion of this chart, but money management takes priority. And so if I have a trade that goes into a losing position, it doesn't matter what I think about the chart. I'm here to protect my assets, because by protecting my capital, I can play the game long term. Now, when I put in an order to enter a market, and let's say it's on a stop basis, what I also do is I attach orders to that order. And so if my entry order is filled, automatically an order gets placed by the computer to put in a protective stop as well as a target. And so oftentimes when I put these orders in, I put them in as a lump order in what's called contingency orders. It's an order to get in on a breakout. It's an order to put in a stop if the order on the breakout is filled, as well as an order to take profits at a target if that's fulfilled. I do not like being what I call naked on the order side. I want to make sure that I have orders in place to do the things that I think discipline would require me to do. And so that kind of summarizes where I am on a Sunday afternoon at 4 o'clock, 3:30, 4 o'clock Mountain Standard Time in Colorado. As I've taken a look at all these markets, I've known what orders are going in. I've placed my Sunday evening orders at least. I've identified where I want to buy, where I want to sell, where I want to protect trades, and it's at that point where I'm going to let the markets take care of themselves as the week goes on. I've done my work up to that point. So now we're past Sunday evening, and we roll on to early Monday morning, and that kind of takes me to stage 4 of my week. There are some orders that I'm comfortable with sitting in 24 hours a day, but there are a number of markets where I'm really not comfortable having orders in during what I consider to be the nighttime orders. Markets, only because they're subject to being stops picked off by high frequency trading operations and algos. And so there's a number of markets that I trade that I only use day orders in. And so early Monday morning, there are some of those markets I've entered orders in. Sunday evening, they're good for the week. They're good till canceled orders. But on Monday morning, about 5 o'clock Mountain Time, I'll get up and I'll start entering orders, for instance, in the grains or livestock or markets like that. I'll only work orders that are during the day. But again, those are already orders that I've predetermined from the evening before. I've already know what those orders are. I've already gotten them written up. They're already in the queue, and it's just a matter of entering them as day orders. Another consideration I have to take into effect because I deal with stops is it a stop that I want active during the day? Because in some cases I don't want to be picked off during the day because of high frequency trading operations, particularly in the thin markets. In those cases, what happens is I'll use stop close only orders. I'll wait for a market to close. Like I've mentioned, the closing price is the most important price of the day. And so I'll take a look at where a market's closed and determine with the few minutes that come into the end of the day session whether I want to end the day in that market. But again, these are not markets that appear to me during the day. These are markets that are already on my short list. And so that ends up wrapping up the day. And then I really go into what I consider to be stage 5 of my week, and that's the boring part of the week. That's Monday, from Monday's close through Thursday afternoon, Friday's close, and that's just reviewing everything at the end of the day. We're at the end of the day Monday. Are there any new positions I'm in? Are there any positions I close that I need to appraise myself on? And so I'm always working against the short list that I have every evening after the close. Every afternoon after the close, I go through my short list. I go through day charts. I go through weekly charts, just taking a look to make sure that the orders then that I have in are orders I want to continue to have in, to make sure that there might not be a change. If it's an entry order that I had in Monday morning, maybe I want a slightly different price on Tuesday based on what I saw from the price action on Monday. And this usually happens around 2:30 in the afternoon, Monday through Thursday. I kind of start going through this. Now, in terms of stop management, trade management, I move stops very, very actively and very aggressively. And I'm talking here about protective stops on positions that I have on. I use what I call active and aggressive trade management protocol. It's a fancy word for basically saying that I'll move stops to break even as quickly as I can, And as a trade is moving, I'll move a trailing stop. And so orders for me are constantly in flux. And that's really comes back to the whole business about trading really being a function of managing my order flow. And it's fine-tuning it, and it's doing it day after day. So that's my week, and we roll around to Friday afternoon, and the merry-go-round starts all over again, and I do it all again another week. And I've been doing that week after week after week, year after year after year, and here we are. And what I'd like to do is just kind of go through a couple of trades and show you how this all comes together, and to give you a feel for what it looks like. And because when I put a trade on, I'm looking at how to identify a candidate trade, how do I enter, how do I size it, how do I know when I'm wrong, what will tell me if I'm right, how do I get out. And so I'd like to show you two examples of recent trades to attempt to put this all together and see how a trade actually comes together. So I want to take a look and show you through a trade I did in Euro-dollar futures this last year, and give you an example of these components that come together. Here was a trade that I had been looking to do for quite some time. It was, in fact, I was among everybody else in the world that was waiting for the Fed to start raising rates. And, you know, how long is this zero interest rate policy going to be lasting? But I need to see something on a chart. It's just not some idea that the Fed's going to raise rate. That doesn't make me go ahead and short the euro-dollar markets. But I had been looking really throughout most of 2015, even into 2016, most of 2016, looking for a signal based on the charts that, in fact, the Fed was ready and interest rates were going to start to raise. And this is a chart of the euro-dollar monthly charts, which gives you a feel for kind of the yo-yo nature of euro-dollars over the years. It's one of my favorite markets to trade. It trends very well, and you can see this massive top negative interest rate policy that began in 2009 and extended all the way out into 2016, where we basically had flat rates by the Fed. I viewed this as an 8-year rectangle, and it's a little longer than a pattern that I really like, but nevertheless, it was a rectangle. It was a horizontal pattern, so it was a pattern that I identified on the monthly chart, but I needed to see something more. I won't trade based on the monthly chart. And, here I'm going to switch over to a weekly chart, and finally, this pattern was completed. This massive pattern was completed, as you can see, in August of 2016, when the market penetrated the lower boundary of this rectangular pattern. And that told me that it's time to really be all hands on deck looking for a shorting opportunity in euro-dollar futures. But again, I don't use weekly charts for timing. It has to be a daily chart, and so I'll convert over and take a look at what I saw in the daily chart, and the chart that came out of it is we built in the weekly chart of the December 2018 contract. You see this big a channel which I identified on the charts, but more than that, that's a diagonal pattern, as you remember. But then we formed this descending triangle on the daily chart. So now we're cooking. Now I have a monthly chart that's rolled over. I have a weekly chart that's broken out. And now I have a daily chart that has a horizontal pattern and gives me a breakout on November 9th. And I shorted the market accordingly. What I do when I put on a trade, I have an idea of where I'm going to get filled. I have an idea of where I'm going to get out if I'm wrong. And so based on where I'm going to get in, where I'm going to get out, I'm wrong, I can calculate the amount I'm risking per contract. From that, then I back myself into sizing. And I say, if I do this trade and I'm going to risk, let's say, 0.8% or 1% of my capital on this trade, based on where I'm going to get in, where I'm going to get out, how many contracts do I do? And so that's how I end up working my way back to the size of the trade that I'm going to do. And so that is that situation. And I'm judicious during the course of this trade, moving my stops down, trailing my stops, and eventually got knocked out of this trade. finally at the end of December. It was a very profitable venture into the euro-dollar trade on the short side. All parts of the trade ended up profiting to the tune of just over 500 basis points. It's 5% of my account based on the short trade. And so that summarizes one of the trades that I did, and that was a good trade, and they're not all good trades. Boy, I wish I could tell you all that every trade I do is like that euro-dollar trade and walk away with 500 basis points. But the reality is that that's not the case. As I've mentioned, my win rate's 40%, so they can't be all that way. As a matter of fact, there's usually only somewhere between 5 and 8 trades in a year when I profit to the level that I profited in euro dollars. A much more typical trade for me is a trade in which I lose 20 or 30 basis points. I start off being willing to risk 70 or 80 basis points, clamp down my risk, and get bumped out with a small loss. That's a much more typical trade. And that's one that I'm going to take you to next to show you what really is a much more usual trade for me to be involved in. And we're going to take a look at a chart here of the May copper market, which is a trade that I did. As you can see on this chart, May copper started forming a rectangular pattern in October, went through a rectangle pattern, and on February 10th, broke out of the rectangle pattern. I'm a breakout trader, so as it broke out, I was there to buy the breakout. In this particular case, it was an alert that I had set, and the alert went off, and I pulled the trigger and bought the market. I set my stops. I was fortunately able to move my stops up a couple of times in this trade, but lo and behold, I was stopped out of the market fairly quickly afterwards on February 16th, which is usually not uncommon for me. Winning trades obviously last a lot longer than losing trades, and this was a trade that I was in and out of in about a 3-day period of time. It was a trade in which I think I lost about 28 or 29 basis points in the trade, and so it's in that 20 to 30 basis point range. And again, this is a much more common trade for me than the trade I walked you through in euro-dollar futures. It has really been my pleasure to have brought you this content. I'm so appreciative to Real Vision to allow me to participate in this project. It all started off with me sitting down informally with Raul Paul down in the Cayman Islands and talking about the journey I've been on as a trader, the long journey that has been a wonderful journey for me. What a pleasure it's been. I count myself so blessed to be able to trade for a living. What a great profession that's been. And then we went through a segment on risk management. And talked about the importance of risk management. I went through a video on charting, talked about classical chart patterns and the pits and falls of various ways to look at a chart. And then we moved on to a video where I went through kind of the role that emotions and character traits play. And now here in this last video, I've been able to talk really about the profession and the process of being a trader and what my day looks like. And this has been a great experience for me. I hope it's been beneficial for you and that you've picked up something that's been a good reinforcement to something you're already doing or given you some ideas on what you can do to improve your trading. And so I thank you very much for your time. You've given me a lot of it, and I don't take that for granted. And so signing off, this is Peter Brandt.